Alrighty guys, what is going up? I hope you guys are all having a great and amazing day today. Now in today's video, we're going to be breaking down NIO. We're going to be seeing what this stock's doing, why it's had an amazing day, an amazing year. So I hope you guys enjoyed it, and if you guys get anything in value, hit the like button. And if you guys want to learn how to properly invest, go ahead and check out my course, and you guys can use promo code DIVIDENDS to get 50% off. So at least check it out. So now guys, let's jump into it for the intro. Let's go. So now today, NIO is up over 8.5%, and what's even crazier is literally 2 years ago, you could have bought this stock for $1.50. And now, with this stock hitting highs at $58, this stock is almost going parabolic. But with this growth, there comes risk and everything like that, but there's still a huge upside potential. Right now, as of today, NIO is partnering with NVIDIA for an autonomous driving car. And this is going to be a huge competitor with Tesla. So now NIO is going to be taking up more market share, making the company more valuable and making that stock rise even more. And for investors, that's really, really good news for them to be taking up more market share. Now, for those of you that don't know what NVIDIA is one of the top companies working on AI, artificial intelligence. So now NIO is partnering with them. So that's awesome. Now what's crazy about NIO is NIO's deliveries have gone up 128%, which is literally crazy. The revenue is up 36% and growing. So this company is growing at a pretty rapid rate. Now, what's the best strategy for your investments? Should you invest now? Should you wait? Well, the strategy that I always recommend, especially for these high growth stocks, because honestly, it's very hard to judge whether these stocks are overvalued, undervalued, or in between. So literally the best strategy for investing in these high volatile, high growth stocks is a strategy called dollar cost averaging. What it is you guys figure out how much money you want to invest. So if let's say you want to invest $1,000 in NIO, instead of putting up that $1,000 all up front, what you will do is you guys will invest $100 per week over the next 10 weeks. So you still will invest that $1,000, but you're spreading out that $1,000 into small payments. So what it does is it gets a good average price for your shares, because if NIO stock continues to go up, you're still making money. And the beauty of it is if NIO stock falls down, all you're doing is you're just averaging your price down for your shares. And now once NIO stock recovers, you're gonna be doubling what you normally would make. This is perfect for these high volatile, high growth stocks, so you guys can get a good average price for your shares. Because me personally, I think trying to time these stocks is very, very hard to do, because it almost feels like each day they're forming new highs. So it's a great way to get in on those gains, but still have a little defense. So if they fall, you're still just gonna average your price down. It's great. So NIO is partnering with NVIDIA. That's kind of what's going on with it right now. So now let's actually go ahead and do some technical analysis. Let's look at some support, some resistance, and pretty much everything in between. Alrighty guys, so you guys can see that NIO has had an amazing year. Really, you could have bought the stock for $2, and 2 years ago it could be $1.50. Looking at this stock here, you guys can see it's had an amazing year, hit highs here at 55, sold off, did find some support near 43. That's where I called it out for a good entry. Now it did use it and tap it again, and then we had a little consolidation near these highs, and then a beautiful breakout all the way up to almost $60 per share. And this really, 8.5% growth was all because of this fundamental catalyst. So this news report stating that NIO is partnering with NVIDIA. So right now, yes, it could be temporary overvalued, but looking at it, the RSI is stating it's at a 68, which is not super overvalued for this stock. This stock has traded in the 80s, 85s before, so honestly, it's very common to see this stock trade in the more overvalued state. And with it now coming up to $60, I still think that looking back, in 2 years, we could be saying, oh man, I wish we would have bought NIO at 60, at 70. So it's all understanding that yes, right now you could be paying a little more, but this stock it's in one of the top growing sectors. And I honestly think that we're going to still have the whole momentum continue to go in 2021. So the good strategy is don't try to time it, and get in now. Yes, get in now, but still do the dollar cost averaging. So if it falls back down to 55, average down. So your average cost will be at 56. If it falls all the way down to 43, average your shares down. It's a beautiful way to invest with very, very little downside because you're averaging your price down, but huge upside because if and when the stock recovers, you're going to be making double what you normally would have. So resistance is at these highs at 59. Support will probably come in at around 55. That's my guess here. This old resistance is going to act as some new support for this stock, guys. So if you still want to do your one lump sum, at least try to wait for it to fall down to 55. Or if you guys, have, heart of chains, you guys can buy in and just hold it and pretend you don't even have it. That would be another good strategy too, guys. So that is it though. I hope you guys enjoyed the episode, and if you did, hit the like button and subscribe, and don't forget to go ahead and check out my course, and we'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, stay safe out there. Take care, everyone. Bam.